Kura Sushi is a stock that is outperforming a lot of big tech stocks at the moment, and that's obviously pretty impressive for a restaurant company. We can see that the market is up 31% over the last year, while Kura Sushi is up about 80%. Compared to some other big tech companies, Microsoft is up 54%, Google is up 43%, Amazon is up 77%. So Kura Sushi over the last year has outperformed all three of those big tech stocks. Some of the main two companies that I've seen that are outperforming Kura Sushi that are big tech are obviously Nvidia at 246% and then Meta at 150%. But besides those two, it looks like Kura Sushi is really able to hang with a lot of these big tech companies and has been producing returns that are pretty similar. So let's talk a little bit about their business model, how they make money, and then also analyze their financial statements to get a look at the revenue and earnings growth that Kura Sushi has experienced over the last year. So basically, Kura Sushi is a restaurant chain that operates in Japan and the US. It offers a unique fast food dining concept known as revolving sushi, which was initially popularized in Japan. And essentially how it works is plates of sushi revolve around the restaurant on a conveyor belt, and customers pay for each plate they eat. Plates on the conveyor belt are often color-coded according to the price of the sushi, making it easy for customers to know how much each plate will cost. This concept allows for a quick and efficient serving of food, reducing the need for servers to take orders from every customer and deliver each dish individually. It also offers diners the opportunity to visually inspect and choose their meals, adding an element of excitement and instant gratification to the dining experience. That's essentially their main experiential differentiator for their customers. The primary revenue driver for Kura Sushi is sales from sushi and other menu items in their restaurants, as well as expansion both domestically and internationally by opening new locations in urban areas. Kura Sushi currently has 64 stores in the United States, with new locations growing rapidly. And in 2023, Kura Sushi actually opened up 10 new restaurants, which was a record year for them. So now I want to look at this little news article titled Kura Sushi USA stock jumps 9.1%. Will it continue to soar? Right here, they point out at the top of the article, Kura Sushi shares ended the last trading session 9.1% higher at $110 per share. So since the time of this article, Kura Sushi is now up to $117 per share. So they're actually up even higher than when this article was made. So actually, to answer the article's question, yes, they will continue to soar. But the question is, how much can they continue to soar from this point? Shares of Kura Sushi are quite likely to have increased on the back of its gains from rising guest traffic in the restaurants, the company's focus on improving restaurant-level operating profit margins, which is one of their main challenges, as we'll see later on from their income statement. Also through new restaurant unit expansion and also leveraging their general and administrative expenses. So these are mainly their fixed costs, and if they're able to produce more revenue and profit with their fixed general and administrative expenses, then they're able to increase their profit margins because their expenses don't really increase while their revenue does increase. The company is expected to post quarterly loss of 3 cents per share in its upcoming report for their first quarter, which represents a year-over-year change of plus 70%. And Kura Sushi has been putting up pretty impressive revenue and earnings growth quarter to quarter, as we'll see later on when I look closer into their financial results. Revenues are expected to be $56.25 million, up 28% from the year ago quarter, basically the first quarter of 2023 compared to what will be the first quarter of 2024. So a lot of good news for Kura Sushi and a lot of potential catalysts for them to continue to increase their revenue and earnings through leveraging their expenses and also opening new stores. So now we can look at their income statement here for the full year of 2023. And their fiscal year actually ends August 31st. So basically this report was released somewhere around November. So we can see that sales in 2023 were about $187 million, up about 33% from $141 million. And although it doesn't say it here, for the fourth quarter, They had revenue of $55 million, which was up 31% year over year. And then they also had net income of $3 million, up 50% year over year. They also opened 4 new restaurants in the fourth quarter. So these are the results not just for the fourth quarter, but also for the first 3 quarters. We can also see net income here for the full year of about $1.5 billion. And that's obviously extremely impressive. It looks like this might be their first profitable year because they lost $764 million in 2022 and they lost 10 million. I think I said 1.5 billion. I meant to say 1.5 million. This is $1.5 million in net income. They lost $10.2 million in 2021. So given that they're now profitable, that's obviously really good news. But unfortunately, as we can see right here, their sales were 187 million, but it looks like their operating expenses were also 187 million. So they're basically breaking even. It looks like their operating costs increased 32% year over year, with their revenue increasing 33% year over year. So they're basically breaking even between sales and the cost of business operations. The main profit point for 2023 was interest income of about 1.4 million. It essentially made up almost all of their net income for the year. So obviously I would like to see sales be more than operating expenses so that the primary source of profitability comes from their business operations, not from interest income. But this company is still new, as we can see over their 5-year chart. They haven't even been public for more than 5 years yet, but they are up almost 700%. So hopefully their business is able to continue growing. Obviously it's still new, but if they're able to increase profitability, then this stock price stands to increase even more than where it currently is. So now I want to look at this Excel sheet that I've used to analyze Kura Sushi further. Typically in my videos, I usually estimate the intrinsic value per share for the company, but Kura Sushi actually has negative free cash flow, meaning essentially the operating cash flow from their business is not enough to cover the property, plant, and equipment investments that they make, which are likely just them opening new restaurants with the cash that they have. So you're not able to really use a DCF model if a company doesn't have free cash flow, so I'm not going to be able to calculate their intrinsic value per share here. But if we go to the right side here, we can see I compared Kura Sushi to 2 of their main competitors, Portillo's, which is essentially like a burger restaurant chain, and then Jack in the Box. And we can see compared to these other 2 companies, it looks like Kura Sushi has the lowest profitability, and they also have the highest price to earnings ratio and the highest price to cash flow ratio. This obviously probably points to a conclusion that investors are expecting Kura Sushi to grow far more rapidly than their 2 of their competitors here, Portillo's and Jack in the Box. And also something to note is that Kura Sushi stock has been exploding recently ever since they went public in August of 2019. They're keeping up with the stock performance of a lot of big tech companies, but Portillo's and Jack in the Box actually have been performing very poorly. They have negative stock market growth. So even though they are more profitable here, from this standpoint, it looks like the winner is probably Jack in the Box because they're the most profitable company, and they also pay a dividend and they're trading at the cheapest price. But if you actually look at their stock performance, Kura Sushi is doing a lot better than these other 2 companies. So it'd be difficult to say just based off of this which of these companies is performing best in their industry. Then lastly, to end off the video, I wanted to compare Kura Sushi to other companies we've looked at on this YouTube channel. Because we didn't calculate their intrinsic value per share, they're not really eligible to make it onto the intrinsic value table, but you can see the companies we've looked at so far that were trading at a very strong share price relative to their estimated intrinsic value per share. Then we can see right here for growth rates, Kura Sushi, like I said before, has negative free cash flow. So they don't really have free cash flow growth, but we can see the companies here that did and how they were ranked from 1st to 9th. The reason why the 10th spot is empty is because Kura Sushi used to be here, but I took them off the list because their free cash flow is negative. Dividend yield, Kura Sushi doesn't pay a dividend, but you can see the companies that paid the highest dividend yields here. For gross profit and net profit, Kura Sushi had pretty low profit margins of around 15 gross profit and about 0.8 net profit. But we can see the companies here that had the best gross profit margins and the best net profit margins. somewhere, or really three places where Kura Sushi excels in this analysis comparing Kura Sushi to other companies we've looked at is in revenue and earnings growth, as we can see right here, as well as in stock performance, which we'll see in a second. But for Q3 year-over-year revenue growth, which is actually technically Q4 for Kura Sushi's fiscal year, they had 31% revenue growth and also 50% earnings growth, which puts them in second place on the revenue table in front of companies like Meta, Amazon, Microsoft, and Google, a lot of tech companies. And Kura Sushi had better revenue growth than all of them in the third quarter of 2023. And then we can also see that for earnings growth, they had better earnings growth than Google, Microsoft, Adobe. So obviously extremely impressive, not just for a company to have earnings growth like this, but also for a restaurant company to have earnings growth like this. That's very impressive. So we can also see that in the second quarter, they also made it onto the revenue growth table here at 29%. So if they're able to continue popping up on these tables, it goes to show that Kura Sushi revenue and earnings growth is pretty consistent at this explosion of growth that they've been experiencing, and that'll obviously have a positive impact on their stock price. Lastly, for stock performance over the last 5 years, Kura Sushi is up about 689%, as we saw right here. And if we're comparing them to other companies we've looked at, they come in second place. I'm probably going to have to update this NVIDIA result here because NVIDIA has increased a lot more over the last 5 years. So I'll make a video on NVIDIA in the future. We can see Kura Sushi is pretty high up here compared to a lot of other companies we've looked at. Tesla so far on this YouTube channel has been the highest at 850%. So let me know in the comment section down below what you guys think of Kura Sushi. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.